Welcome to the scenario set piece. Throughout this series, we'll break down the numbers, the costs, and how lender policy all plays a part in purchasing your property in Australia. I'm Colliers, the Director and Mortgage Broker of VK Financial. We are your finance teammate in purchasing your first home or investment property. Now in today's episode, we're going to show you the long-term game plan in purchasing a property in LMI territory. Alright, let's draw up the scenario. Firstly, we are looking to purchase a property in Western Australia. We assume that our maximum borrowing capacity is $505,000. We assume that our interest rate and monthly repayments are fixed and stay the same for the given time period in this example. We have $130,000 of savings to contribute to the purchase of the property. Now we want to review our position in 5 years' time. And finally, we assume that the property has only risen by 2%. Now let's look at the set piece of the investment property. So our property value is $600,000. Our loan is $500,000. Because we have less than a 20% deposit, our LMI or lender's mortgage insurance cost is $5,000, given our total loan being $505,000. Now the final LVR on this is the loan divided by the value of the property, which gives a final total of 84.17%. Now our interest rate for this example is 7%. Our loan term is 30 years, given our monthly repayments being a total of $3,360 per month. So what are the purchase costs for this property? The deposit is $100,000, which is our base loan minus the property value. The stamp duty in WA for this purchase price is $23,061. Our estimated legal, mortgage registration and adjustments are $3,650, given our total purchase cost being $126,711. Now with our $130K of savings, we actually have $3,289 left over for this purchase. So the long-term plan is to move you out of LMI territory as quickly as possible. Now to avoid LMI, our LVR has to be under 80%. So that's the goal here. So let's go back to the table. So after 5 years, we assume that our property value has risen by 2%, which in this case will be $612,000. Now our loan balance is $475,364 because we've made the same repayments and the interest rate has stayed the same over the last 5 years as per our assumption. So since your LVR has now dropped below 80%, we ask the current lender for a valuation, or we go and seek other valuations from other lenders to see what your equity position is. Now this creates an opportunity to see how your property is valued across different lenders. Now because the goal is under 80% LVR, if we have an opportunity to refinance to another bank to achieve a better interest rate and better monthly repayments, well, there's a great opportunity to do so. Now remember, you still have to meet the serviceability requirements and lender policy of that assessment. So for this example, we've gone to the current bank, we've got the property valued again, and they've basically come back with a reduction saying, okay, we're gonna drop your interest rate by 0.05%. So now how does that look? So our interest rate is 6.50%. Our loan term is 25 years because we have accelerated 5 years from the purchase. Our new monthly repayments are $3,209, giving our monthly savings of $151 per month. So the long-term plan is to hopefully get your LVR down as quickly as possible while still maintaining an asset that is appreciating. This strategy can help you enter the property market sooner rather than later. Now for this example, we didn't have to wait for a 20% deposit to purchase a property. All we did was capitalize a little bit of LMI, we still got into the property market, and now 5 years later, we've been able to retain the asset, it's appreciated in value, and we've been able to reduce our repayments and interest rate as well. So there you have it. That's how you purchase a property in LMI territory and the long-term plan associated with it. We are the Thierry Henry of home loans. We can definitely help assist and score your first home or investment purchase. Give us a call. I'm Colliers from VK Financial, your finance teammate.